Welcome, everyone. Thank you for joining us at the Inspire series, a joint collaboration between Google and G20 Digital Innovation Network, organized by the Ministry of Communications and Informatics of Indonesia this year. We have folks tuned in from over 10 countries: Singapore, Malaysia, Thailand, Korea, India, Indonesia, and a few more from Saudi Arabia, Turkey, Australia, Argentina, US, and Brunei. We are super excited to have you all tune in with us today. Thank you and welcome again. We will begin our session now. I would like to invite Indonesia's Minister of Education, Culture, Research and Technology, Nadiem Anwar Makarim, to deliver his opening remarks to kick off Inspire.
Participants, ladies and gentlemen, thank you for inviting me to open this session of the Inspire series with Google 2022. I'm thrilled to meet the founders and innovators representing the G20 member countries and special invitees, who I believe embody the essential values of creativity and resilience. As a former founder myself, I know exactly how important these values are to bringing new ideas to life. Now, as the Minister of Education, Culture, Research and Technology, I am honored to have such an energetic, innovative, and committed team that holds the transformation of the education system as our guiding principle. Through our Merdeka Belajar, or emancipated learning sets of policies, we are bringing about a new learner-focused, student-focused approach to the curriculum and assessment that is allowing students to fulfill their true potential. Beyond that, we are working to unbundle higher education, to break down the barriers between industry and the education sector, to promote collaborations in research, development, and production. I'm excited to see what cross-sector and cross-border collaborations will arise from this week's event, leading up to the Digital Innovation Network Conference in Bali. Throughout this week at the Inspire series with Google, you will hear from and engage with fellow founders, venture capital partners, leaders, and experts on how to start strong, persevere, and make the best use of technology. Later, at the Digital Innovation Network Conference, you will see how collaborations are creating innovative solutions to the challenges society faces. On that note, I'd like to express my appreciation to my colleagues at the Ministry of Communication and Informatics for leading the Digital Innovation Network events this year, and to our trusted partners at Google. I'm very pleased to kick off this mentorship week and wish all of you a productive and educational week ahead of you. Thank you very much for all your time.
Hello, everyone, and a warm welcome to Inspire series with Google. First, what an honor to have Minister Nadiem Makarim open our session today. His vision to transform the education system here in Indonesia has been an inspiration to all of us. As part of his emancipated learning policy, Campus Merdeka, Google is very proud to support the minister and his team at the Ministry of Education, Culture, Research and Technology through our digital skilling program, Bangkit. Bangkit is a Google-led academy with GoTo and Traveloka designed to produce high-caliber technical talent for world-class Indonesian tech companies and startups. This year, 3,000 students from 250 universities across the country learn together through classes on machine learning, cloud, mobile computing, and professional communication to help them succeed in their future careers. Second, I would also like to thank our partners at the Ministry of Communication and Informatics for this excellent collaboration, and to the Government of Indonesia for its G20 presidency this year. One of the priorities of G20 this year is accelerating digital transformation. And here at Google, we are very committed to supporting Indonesian businesses to speed up their sprint into digital economy through our products and initiatives. Take Google Play, for example. There are today more than 10,000 Indonesian developers on Google Play, and we work with them every single day to understand and overcome the challenges that they face. Our goal is to help local developers bring their innovative ideas to life consequently growing their business, creating jobs, and driving positive change in their local communities. Another example is Google for Startups Accelerator. This 4-week initiative brings the best of our products, people, and technology to startups, all of which are working to solve the challenges that we face today, whether in fintech, edtech, retail, logistics, or healthcare. And today, we are very excited to have you, founders and startups, representing the G20 countries, and we are very committed to help you thrive in your journey. So, before we kick off this week's mentorship, please allow me to briefly paint a picture on what's ahead. Today, you will hear about the global outlook affecting your business because we know how important understanding your business landscape is to succeed. Tomorrow, you will learn about ESG investing, answering your burning questions on how best to present your ESG story to investors. And in the following days, you will learn more about product design, application of AI and machine learning, and leadership. Our experts from Google Safety Engineering Center will also offer you a privacy clinic to share best practices that can help you design user privacy experience and build products with privacy by design. All of these discussions, I hope, will inspire you to continue to grow and innovate. Have a great session.
Hello, everyone. A very, very warm welcome to our audience from around the world. More than 10 countries are being represented, a combination of founders and VCs. So, very excited about it. According to CB Insights, global startup funding fell 23% in second quarter of 22 from first quarter, with 108 billion being invested across over 7,600 deals. This marked the biggest quarterly percentage drop in deals in a decade. Despite the steep dive, funding and deal numbers remain above 2020 levels. Joining me to discuss this topic and share their perspective on global startup outlook and funding impact are two amazingly seasoned global investors. Rajan Anandan, Managing Director, Sequoia Capital and Surge India and SEA, and Sandeep Singhal, Senior Advisor, Avana Capital. Rajan is the MD at Sequoia India and SEA and Surge. As a part of Sequoia's leadership team, Rajan is focused on developing Surge into the world's top scale-up program for startups by acting as an investment advisor and mentor to the program. Rajan's deep understanding of tech, operating experience, and track record of growing tech businesses across the region help Surge and its founders scale and build businesses of tomorrow. Prior to Sequoia, Rajan was the head of Google India and Southeast Asia and played a pivotal role in expanding the region's internet ecosystem. Rajan is also a prolific angel investor who's backed a large number of successful startups at various stages. Rajan has also led Microsoft and Dell in India and was earlier a partner at McKinsey and Company in Chicago. Sandeep, very warm welcome to you.
Thank you.
Co-founded Nexus Venture Partners in 2006 and grew it to AUM of 1.5 billion with a portfolio of over 75 companies before transitioning to a senior advisor role in October 21. Sandeep currently represents Nexus on the boards of various portfolio companies. Prior to Nexus, he was a co-founder and CEO of Medicine Solutions. He also co-founded and led eVentures India with investments in Make My Trip, Customer Asset, NetMagic Solutions. Sandeep has also held senior roles at McKinsey and Company Digital Equipment and EDA Systems. Sandeep has an MBA from the Wharton School and a BS in Electrical Engineering from Stanford. He's on the board of TiE Mumbai, actively involved with the Wharton and Stanford India Alumni Associations, and is very passionate about philanthropy. Thank you, gentlemen, both of you, for joining this call and agreeing to share your insights with various VCs and early stage founders on the call. So, we are at a very exciting time. We are speaking at the G20 summit with Indonesia being the host nation. What are some of the exciting opportunities in Indonesia and the region? Rajan, we can start with you maybe.
Yeah, thank you. Thank you, Apurva, for hosting us. Sandeep, great to see you. And
Good to see you as
congratulations
well.
to Google and also Indonesia for hosting this very exciting series. I wish I had the time to attend all of the sessions. Look, I think in terms of what's exciting, in startup land, everything is exciting. I think globally as an economy, obviously we have lots of headwinds. Given rising interest rates, given the Ukraine-Russia conflict, and many other things that are happening around the world. But I think within startup land, with the exception of funding being, challenged at this point, that Sandeep and I will speak about, I think everything else is very, very exciting. I think across countries, whether it's Indonesia, Thailand, India, Vietnam, Philippines, Korea, you're seeing sort of more and more consumers spending more and more time online. You're seeing the growth across not just e-commerce, edtech, digital health, every imaginable consumer business really, really exploding. And then you're also seeing, a new generation of entrepreneurs, right? It's very interesting. In Indonesia, as Sequoia, we probably had over a dozen investments already this year. Most of those entrepreneurs actually are either second-time entrepreneurs coming out of Indonesia, or they actually are coming out of companies like Traveloka, like Gojek, like Tokopedia. So across the region, what you're seeing really is entrepreneurs with more experience building companies. You're seeing markets getting deeper, and all of that is sort of leading to a very, very energizing ecosystem, right? It's very interesting. When I was at Google in 2005, since I'm assuming many of you are from Southeast Asia, in 2015, I'm sorry, Google and Temasek published the first Southeast Asia e-economy report. And I distinctly remember that year, there was, sort of less than $1 billion of venture capital funding. There were very few unicorns. I can't even remember how many, maybe like 2 or 3 unicorns in the all of SCA. And it was a very, very nascent ecosystem, right? And here we are sort of 7 years later, and we're in a whole different place across Southeast Asia, in India, and just about any country that you can imagine. And in fact, today we announced our 7th cohort of Surge. So Surge is Sequoia's early stage platform that we have for seed stage founders. And if you look at the kind of companies, I think they reflect the dynamism and the diversity across sectors, across nations that we see startup activity in. So Apurva, long answer to your question, but it's an extraordinarily interesting and exciting time in startups.
Thank you, Rajan. Sandeep, you've also been an active investor in the region. So let's start with Indonesia. What excites you about the region, Indonesia, Southeast Asia?
So we've obviously been investing more in India, but many of our companies have actually tapped into the Indonesian market and have started operations there and have been very successful. And I would say, in some ways, India and Indonesia are very similar, both, fast-growing economies, both very entrepreneurial in nature, both sort of in some ways, because of a SME-led model, have both sort of been very startup friendly and have given very similar opportunities. You look at what Gojek has built in Indonesia, or what Tokopedia built, as Rajan mentioned, and the same things apply to India. So in some ways, sort of we've gone lockstep in both the economies. As a nation, they're both sort of young economies. So the demographic dividend that we talk about, I think, is applicable across. So a lot of similarities that I see, and I think that is a broader issue that I see as a huge positive. I think Rajan talked about startup land, but I think the broader issue is there is a shift towards Asia, and we've been talking about this for a while, that there is a shift happening towards Asia. But I think that shift is becoming more and more marked now. People are already looking at Europe as an economy that will remain stagnant for a while to come. And the US will always remain a vibrant economy, but if you start looking outside the US, then Asia is now sort of is front and center. And even within Asia, I would say the developing economies of Indonesia, India, Southeast Asia, even Middle East. I think that's where there is more focus coming, and you're starting to see that also getting reflected in capital flows. And so both at the public market level as well as the private level, I'm seeing very strong message towards Asia. And I think that's going to be hugely beneficial for all the founders who are on this call, who have, from the names of all the countries that you mentioned, they're all sort of Asia first. And I think you'll see a lot of capital coming your way.
Thank you, Sandeep. So, Rajan, I know you visit the region very often, and I saw some posts on Twitter with you being, I think, welcoming the new search cohort there. So, which are some of the most exciting companies, as per you, coming out of Indonesia and Southeast Asia?
So I think asking this question of which are the most exciting is like saying which of your children are your favorite. I mean, that's not a question you can answer, because we have a large number of companies in search now, 127 companies across India, Southeast Asia, as well as actually a few in Australia, and now Hong Kong and Taiwan, and others, and Bangladesh and so on. But actually, if you look at the current cohort, right, and you look at our Southeast Asia companies, it's a really interesting mix of companies, and it's sort of reflective of, without getting into too much detail about specific companies, right? We have a company like Unravel Carbon, which is in the climate tech space, right? So they help enterprises measure scope 3 emissions. We think climate tech is super interesting. Whether it's on the one end of the spectrum, you have EV innovations, batteries, EV OEMs, EV financing, swapping networks, recharging networks, things like that, sort of at one end of the spectrum. On the other end of the spectrum, you have companies like Unravel, which we're super excited about. So as large companies as well as mid-sized companies start committing to getting to net zero by 2030, by 2040, by 2050, obviously the first big step is to actually measure emissions, right? And Unravel actually helps companies in Asia measure their scope 3 emissions, which are actually very difficult to actually measure, and they help them measure that very seamlessly. And then there's going to be lots and lots of companies in the middle, right, that will go from sort of energy storage to carbon markets to so on and so forth. And we are beginning to see some very interesting. I think every week in Indonesia, for instance, we meet a very interesting climate tech company. So that's one example of a company. Fintech, will be for a long time to come a very large opportunity for innovation all across Southeast Asia, including in Indonesia. In fact, in this cohort, we have a company called Wiz, which is building a neobank for teenagers. They're a licensed neobank for teenagers. It's super interesting. It's a very seasoned team out of Indonesia that's building that. And we have another fintech company called Beam, which is a one-click checkout in Thailand. Very few people talk about Thailand, but Thailand is a 20 billion sort of e-commerce market already, and it's growing very fast. And in fact, more than 50% of the Thai e-commerce market is actually social commerce, right? So what they're doing is they built this one-click checkout platform that's growing like crazy for social sellers to make transactions easy. So fintech, and I can keep going, but there are a large number of fintech companies all across the region. Then if you look at Indonesia, we have a company called Semi. Semi is in the Agritech space. We think Agritech in Indonesia, in India, in Thailand, in Philippines, in Vietnam, pick your favorite country, maybe with the exception of Singapore, where you don't have a lot of farming yet, but you do have actually interesting clean meats, clean foods type companies. But Semi essentially helps digitize agri value chains in Indonesia. So that gives you a sense of the kind of companies that are coming up. We have a company called Meta School based out of Singapore that is building a Web3 academy. So it's an upskilling platform for Web3, Web2 developers who want to transition into Web3. There are 30 million Web2 developers in the world, but only 24,000 Web3 developers that are actively building projects in Web3 today, right? It's quite remarkable. I mean, even after the big correction, right, Web3 is today still got a market cap of about over $1 trillion, and there are only 20,000 developers that are focused on this. So these are some of the companies. I think today we announced all our companies, but really across the if you look at Indonesia, one of the things that very few people understand, especially outside of Indonesia and Southeast Asia, is that the e-commerce market in Indonesia is larger than India, and it's growing faster than India, but it's got less capital that has been invested over the last 10, 15 years, than in a lot less capital than India, right? So in India's e-commerce market is about 60 billion GMV. It's growing at about 30%. Indonesia's e-commerce market is larger. It's growing faster, but a lot less startup funding has gone into the Indonesian e-commerce market. So as a result of the large market, and by the way, the reason is because GDP per capita of Indonesia is $4,000, which is double of what it is in India, right? And as a result of that, we're seeing very, very interesting companies being built, right? Whether it's new direct-to-consumer brands. So those of you in India will know companies like Mama Earth, or just even within the search portfolio, companies like Minimalist and Bellora and NatHabit and Skillmatics and so on. But in Indonesia, we're seeing some superbly interesting companies getting built in spaces that range from personal care and beauty to food to fashion to textiles and so on and so forth. So really, what you have is country of 260 million. Randy would have these numbers from Google, but over 150 million connected users with real purchasing power, right? With real purchasing power to be able to buy products, buy services, and you're seeing sort of this explosive growth across segments, right? Whether it's edtech, direct-to-consumer brands, e-commerce enablers, last-mile delivery. So all of these segments are really growing very rapidly. So it's no longer Apurva, if you go back to India, if you had asked me in 2015, right, India was really all about e-commerce. Then we went into all about mobility and ride sharing, then all about edtech. But today, India is really, innovation across many, many different segments. Indonesia is also at that stage where it's innovation across many, many segments. And I would say, depending on Southeast Asia, the country, you pick Thailand, Vietnam, Philippines, depending on the country, there are different stages of evolution in terms of their startup ecosystems.
Thank you, Rajan. It's amazing to know the excitement you share for the Indonesian market, and we share the same at Google. Sandeep, let's zoom out a little from Indonesia now, and I wanted to ask you about the elephant in the room question. There's a lot of talk about funding slowing down, current scenario being lukewarm. So how long do you think this will last, and what is the impact, if at all, on the region's startup ecosystem?
You just heard Rajan talk about the excitement that is there, in their search portfolio, and I think the point that he also raised was that there is this huge segment of climate tech, which I include Agritech. He mentioned a company in Agritech as well, that I include sort of Agritech in the climate tech segment, which is just there is so much capital there. I think we are missing. There's this story of gloom and doom. I actually don't buy that. I think it has to be nuanced. There is a lot of capital at the later stage company that has sort of stepped back. So you have these large companies that have large valuations that people are questioning and saying, if the public markets don't support these valuations, can I really invest in late stage companies and give them these valuations? So there's a connect, there's a disconnect there, and there is a correction happening there. At early stage, I think what Rajan just brought out was there is just amazing opportunity, right? So you look at every single country in Southeast Asia, you look at India, you look at the opportunity at early stage in creating disruption, bringing in digitization, that still remains. It's still very, very early, right? Randy put this note out that the number of connected users has gone from 150 million to 210 million, right? So, and I'm sure it's happened only probably in the last year. So just the pace of growth and the ability to come up with new business models at an early stage to try out new things. I actually am not seeing people sort of I'm not seeing people walk away from deals. There's still a lot of desire to deploy capital at early stage. So I would not, if I'm an early stage sort of entrepreneur, and I am building something that is truly adding value, and I'm seeing growth happen, there will be capital available. So I wouldn't worry about capital availability at that stage.
Yeah, maybe I'll just build on that, Apurva. I think it's important for founders in Southeast Asia to know this, right? There's close to $5 billion of early stage capital that has been raised by dedicated SEA funds, announced over the last 6 months, right? So Sequoia announced our first We announced our first SCA dedicated fund, 850 million. Insignia, like 2 weeks ago, announced that they've raised 450 million in their most recent set of funds. Whether it's EV, whether it's, like literally the top 6 or 7 funds, if you add them all together. Jungle announced earlier this year that they raised a $600 million fund. So there's a significant amount of capital in Southeast Asia. And by the way, I don't know how many founders are dialing in from India. The exact same is true in India, right? I think Sandeep would know the numbers better than I do, but over $5 billion have been announced of early stage funding, just for India, India dedicated funds over the last 6-7 months. So there's a lot of capital now. So absolutely agree with what Sandeep said, that there is enough capital. I think what founders should keep in mind though is everything that you read in 2021 is no longer valid. Okay. So in 2021, for instance, just to give you a sense, right? If you're trying to raise a Series A and you were a SaaS company, right? So let's say you were trying to build software as a service from either India or Indonesia or Singapore to the world, and you had a very strong team, you're going after a large market. Let's say you were going after some part of the modern data stack, and you had, let's say, $200,000 of ARR, you could have raised a pretty large Series A, actually, what we would call today a Series B, let's say a $10 to $15 million Series A, at a valuation that was well north of 50 million pre. Today, that is not going to happen. Okay. So, today, essentially, we are back to, you need to have a set of metrics that investors would have expected in 2018 or 19, right? So today, if you're a SaaS company trying to raise a Series A, you have to get to about, you have to still have the same sort of team dynamic. You have to have a very strong founding team. You have to be going after a large market, but you have to be sort of at that million or above million ARR type revenue. You need to be growing 3x year on year. You have to have very strong NRR and so on and so forth, right? And your LTV to CAC needs to, or your payback periods have to be very reasonable. So the set of metrics, especially that Series A investors are looking for and Series B investors are looking for, have gone back to what they were. I would say in 2018 and 2019, I think because of the massive amounts of global liquidity and the fact that you had trillions of dollars of capital that went into all kinds of asset classes, right? Including startups, including real estate, including public markets. Late in the second half of 2020 and all of 2021, we were sort of in an environment that really, quite frankly, was very, very unusual. So I think one thing for startup founders to keep in mind is that we're all now in August of 2022, and I keep telling our search founders that 2022 is not 2021, right? So you've got to be very, very clear, and whether you're raising a seed round or a Series A or a Series B, I think make sure that you deeply understand what is it, especially like at a seed round, you don't need metrics, right? Actually, our most recent search cohort, the one that we announced today, over 50% of the companies we invested in before they had launched anything. So at seed round, you don't really need to have launched something, but certainly if you want to raise a Series A, and for sure in Series B, you need to actually deeply understand the set of milestones, the set of metrics that you need to get to be able to successfully raise a round of capital.
Yeah. And I think that just to add to that, Apurva, I think the point that Rajan is bringing up is fundamentally around capital efficiency, right? So the issue that we had for, say, a 2-year period is we lost sight of that as a ecosystem. And I wouldn't say it's entrepreneurs alone, right? Even the capital was sort of saying, hey, go grow at any cost, don't worry about capital efficiency. I think that overall narrative has shifted. So I think what Rajan is bringing up is that if you are now raising capital and you don't want to dilute, you still, you obviously don't want to dilute beyond a certain level. So your amount of capital raised will come down for the same amount of dilution because your valuation is lower now, right? And so in that situation, as a founder, you have to think about capital efficiency a lot more than you would have over the last 3-4 years. And I think that's the critical shift that has to happen in every single founder.
So again, a question for both of you. So Rajan and Sandeep, hypothetically, if a company is doing well, say it's a SaaS company, 3x growth, crossed a million ARR, is this a good time to raise, or are you better off holding on, waiting for? What's your advice?
So my point on this is there is never a good or bad time to raise. There is always when you need the capital, you should raise it. You cannot time the market, and particularly in startup land, you should not time the market because this is a very, very inefficient market in a lot of ways, right? In the public markets, there is still some efficiency because of the scale that at which things are working. Here, there is, you are one, and even in terms of investors, you may have a dozen investors, or you may have 20, 30 investors at most, right? So it's a very small ecosystem, and so timing the market is not the right answer here. Timing the need from the company perspective is what is more important. You should be raising capital when you think you need to deploy it to optimize your growth. And I think that's the critical thing that every entrepreneur should be thinking. Arjun?
Yeah, no, I absolutely agree. One of the things we try to get our founders to think about is whether they can get to having 30 months of runway. Okay, so basically 2.5 years of runway. So you can look at your monthly burn, and then you can forecast your monthly burn. If you're, by the way, if you're profitable, you don't need to raise, right? So at some stage, that's why every startup needs to kind of we have this term at Sequoia called enduring companies, right? Like Google is an enduring company because it generates tens of billions of dollars of free cash flow, right? So once eventually you want to get to a point of where you're profitable and then you're actually generating insane amounts of free cash flow. So if you're profitable, then obviously you don't need to raise. But assuming you're not profitable and you're still very much in that build phase, so therefore you have some burn, you sort of forecast out your burn depending on your growth plan, and then you say, look, how much runway do you have, right? So what we sort of try to say is, look, if you have less than 6 months of runway, you're in trouble. So you should be raising already, right? And you should raise from whoever you can. You should not worry about valuation, etc. 6 to 12 months is still not really in a safe zone, right? So what we would say is you probably should be raising. Now, if you have 30 months of runway, then this is not a look. This is a tough. Despite the fact that there is $5 billion of funds that have been raised for Southeast Asia over the last or announced over the last 6 months, it's not a good time to be raising, right? You can just read the news every single day, so you don't need to raise. So I would say, one simple way to think about it is, how much runway do you have? I mean, if you have, we would say if you have less than 18 months of runway, you should. I wouldn't spend all your time trying to raise, but certainly, if you're able to, let's say maybe there were some investors in your last round that couldn't invest, right, because your round was oversubscribed. I mean, 2021, just about every round was oversubscribed. You may want to go back to some of those investors and say, hey, look, would you like to top up, we want to do a top up on our round, right? Because runway, see, the last thing is, the most important thing for a startup, especially in the current environment, is you don't want to run out of cash. You don't want to run out of cash. And by the time you get to about 6 months of cash, I don't know whether there are any of you on the call that are in that situation, right? It gets to be, stressful, right? Because, you wake up every morning thinking about, like, how do I, make sure I can pay payroll, 6, 7 months from now. So you don't want to be in that situation. So that's sort of a one yardstick that we use to figure out should you raise or not, and when should you raise.
That's great advice. So last year, we saw a lot of VCs globally investing in, no pun intended, moonshot projects. So quantum computing, driverless cars, companies which were into tunneling and transportation using tunneling. What's your view to founders who still have these moonshot dreams? Is this the right time to go after moonshot ideas and try raising investor capital?
Certain sectors will always have moonshot ideas. Nuclear fusion, there'll still be people who'll fund moonshot ideas in nuclear fusion because it's a science-led sort of initiative where space, all of these areas. So there are areas where there is capital going in, and I think, in fact, I would say climate tech has in some ways again created a sort of license for entrepreneurs to go after moonshot ideas, because it's a space which has so many sort of open-ended issues that in some cases the only solutions will come from sort of deep science and deep tech. So I think there will be opportunities in that area.
Yeah, fully agree with Sandeep. I think climate tech, again, is so vast and so broad, right? By the way, the most active funder of nuclear fusion projects is Bill Gates. So if you're gonna do nuclear fusion, there's clearly one of the wealthiest men in the world who's putting huge amounts of money. Again, look, at the end of the day, entrepreneurs should start up not because they want to just build a company, right? They should start up because there's a problem that they're deeply feel passionate about solving, right? So if you're, for instance, going to go after something that's truly moonshot, that is deep tech or breakthrough tech based, you have to come to the table with very, very deep expertise, in that area, right? So for instance, India is now talking a lot about semiconductors, right? So, will India have interesting semiconductor startups come up? Yeah, absolutely. Is that moonshot? You bet, right? Will they get funded? Most likely. But it all depends on the founders, right? Do they have sort of that deep expertise? And truly unique insight about how they're going to solve, and do they have a demonstrated, especially when it comes to moonshots, right? Like, for instance, if Rajan Anandan woke up tomorrow morning and said, I'm going to launch a new biotech company, and it's a massive moonshot, right? I mean, that is going to be 100% guaranteed to be a failure. You know why? Because I don't know anything about biotechnology. So it has to be based on expertise, that the founders have in that particular area, Apurva.
And
Thank you
Apurva, I
so
think
much.
this is just to add to this. I think this is one area in particular where Asia again could potentially bring ideas to bear. Given our sort of scale economies in certain areas, there are ideas that could come from here that may not be there in Western markets.
Sandeep, climate tech is very hot, right? A lot of action happening. Inside climate tech, there are a lot of many verticals, everything from carbon credit trading to which are the top two or three opportunities, according to you, which personally excite you and Avana?
So we're at Avana. The team is focusing on three broad areas. So one is energy transition, and energy transition is happening in two big areas. So one is the entire supply chain is getting electrified, right? So there is a big shift happening on just the commercial side of mobility, and then the second is obviously personal mobility. So those both those areas are very important. We are seeing obviously large scale project work happening in renewables, in wind and solar and so on, which are not as sort of fundable at the VC level. But again, as Rajan was describing, there are companies that are now building digital solutions on top of these large project initiatives, and I think again, very large opportunity there for Asia-based entrepreneurs to actually take the lead globally. So that's one big area. The second area that we are looking at is agri-tech, and again, Asia is very well suited to lead the world when it comes to agri-tech. We have, in some ways, I would argue that our farmers are the most innovative in their practices, because they haven't had the support of like big ag, right? So they've done a lot of learning in their own way, and there's a lot of insight and information that entrepreneurs can tap into, which can scale globally. We invested behind organic. We've right now invested in a company called Iki, which is doing effectively industrial farming, but not using high energy. So it's a low energy play, but again, very very cost effective scale up in controlled farming. So I see people like that really, entrepreneurs have the ability to sort of build businesses from Asia, from Thailand, from Indonesia, from India, from Laos, from Vietnam, that are global companies. And the third big area is again, it's slightly more, I would say, challenging, because regulatory frameworks come into play there. But this is resource management. So land, water, and air are all three big areas where we will have to find solutions. But there, because most of these are seen as public goods, particularly in Asian economies, it's a little bit of an overlap with the regulatory framework that we need to manage. And again, there, looking for entrepreneurs that understand how to manage regulation is important part of how we evaluate opportunities.
Thank you, Sandeep. That was a great summary of the opportunities. Rajan, this is a question from Ayushi, who's an early stage founder. As an early stage investor, how do you evaluate the prospective companies across pre-seed, seed, or Series AB? For different stages, what would be your approach among credibility of founders, company's mission, vision, product market fit, or metrics?
Yeah, I think it's a great question. Look, so first of all, the team is, whether it's seed or Series A, or even at Series B, right? The team is by far the most important. Now at seed, as I mentioned, if you look at our most recent cohort, when we actually partnered with these companies, over half the companies, I think of the 15, 8 of them were actually pre-launch. So essentially, when you have a pre-launch company, really all you have to go by is the founding team and the market, right? So seed investors tend to massively over-index on the caliber of the founding team, and also try to make sure that the market is large enough where if you're successful, you can end up building a very large company, right? So for instance, when we invested in when we partnered with, let's say, Wiz, which is the, by the way, you can just go ahead to the surgeahead.com site. You can look at the Surge 7 cohort. You can look at the profiles of the companies. That will give you a sense of the kind of founders, right? So it's a very, very seasoned team. That's a mix of sort of banking and consulting that came forward to launch Wiz, which is the teenage neobank. Similarly, Semi, which is the Agritech company. The one of the co-founders had been has actually, this is his second company. He's a serial entrepreneur. The other one actually had spent 15 years in ag in Indonesia, as an ag economist and as an ag financier. So the founder market fit and is very important. Deeply understanding a space, being complementary, and also one of the questions we ask is, do we believe this team will stay together and keep building for 10, 15, 20 years? So that's sort of probably the single biggest thing at seed. The other one is obviously the market. We want to make sure that the market is large enough where if you're successful, you're going to end up building a very large company, right? So both Gojek and Tokopedia, my partner Shalendra led the Series A's in both those companies. GoTo went public and it's, trading at $23-24 billion. So I think you get the idea. That's sort of what you want to see. You want to see markets that are large enough where you can build those kinds of companies. I would say in Series A today, you have to have product market fit. If you don't have PMF today, it's very, very difficult you may be able to get by because, you're just a phenomenal storyteller and you're a second time founder and maybe you have some early signs. But if you really want to be sure that you can raise a Series A, you do need to have product market fit. So you still need the founding team, but hopefully at Series A, you've also hired several senior leaders. You kind of started building out your management team. You have to have product market fit, right? So depending on one thing for all of you on the call, all the founders on the call, depending on the industry you're in, make sure that you understand what are the set of things you need to see for product market fit, right? And at Surge we have, like, depending on whether a tech company, fintech company, payments company, lending company, whether you're a SaaS company, DevTools company, vertical SaaS company, we've defined sort of what do we need to see, right? I mean, at a simplistic level, right? You've got to see that. And I would say at Series B, you have to have what we call converging unit economics, right? Meaning you don't have to be profitable, but your unit economics need to be quite strong. So actually, even in Series A today, right? If you're a transactional business, let's say you're an e-commerce company, or you're building a consumer brand, right? Food brand, beauty brand, health brand. If you have negative CM2, that makes it a little more challenging today. But at Series B, with negative CM2, which is contribution margin 2, right? After you take marketing, you take out all variable costs, logistics, etc. You take out manufacturing costs, COGS, and then you take out marketing, and that's basically CM2. If you have negative CM2 today, it's very, very difficult to raise a Series B. So founders and market is seed. At Series A, you need to have PMF, and at Series 2, your unit economics need to be they need to make your mom proud, because you just need to be able to tell her, Mom, I don't lose any money on every unit I sell. Right? By the way, negative CM2 is you lose money on every unit you sell. Okay, I mean, think about it, right? Would you put your own money into a company where every unit they sell, they lose more money, which means the faster you grow, the more money you lose. You're never going to invest in that company. But by the way, to Sandeep's point, last year, everybody kind of got carried away, and everybody assumed that when these companies became much larger, you'll start generating money. But today, there's very little appetite to invest in those kind of businesses.
Thank you. Next question is: should an entrepreneur join an incubator, accelerator, or work on his own?
Yeah. Look, at the end of the day, you should figure out what is it that you need, right? So, different incubators, launch pads, platforms. Surge is not for everyone, right? Like Surge has a certain set of benefits, capital plus community plus lots of company building support, etc. So if you think that you will benefit from that, most, like large number of our founders are actually repeat founders. It's not the first company that they're building. Despite that, they seem to get tremendous value out of the program. But at the end of the day, look, you should decide what, most important thing is, why are you building your company, right? What is the mission? What is the why, right? And then you kind of say, like, where do you need help, right? Like, we find in general, being a part of a community of like-minded founders who are going through a journey at the same time can be very beneficial. But at the same time, you may sort of say, look, I don't really need that, because I'm fine. Just I just need some capital, and I'm going to keep building, and that's fine too. So there's no right answer. It really is, as we tell our Surge founders, right? Surge is what you make of it, and you may or may not want to explore something like that.
Yeah, great. So this is a question from Abhishek Anand. How do VCs evaluate whether to fund a startup or not? And an add-on is, what metrics are used for evaluation? Clearly,
I
very
think
early.
Rajan covered. I think Rajan covered that point when he spoke about the seed, Series A, and Series B. Right. I think
EMF,
sort of
yeah.
encapsulates what we do.
Yeah, I think, Abhishek, that's a great answer to your question. You asked for whether to invest or not, and you got the full thesis from Rajan across stages. Sandeep, this is a question specifically for you. Founders are hearing conflicting choice from the ecosystem. On one hand, to build sustainable products, companies, services, and at the same time to maximize profits. And I think this implies that sustainability comes at the cost of profit. So startups are faced with conflicting choices. So as the CEO of a company, what should you solve for?
Yeah, I think I think there's a bigger point here which has to do with what Rajan sort of called product market fit, and there are segments where, for various reasons, there is a shift happening towards sustainable products, and there are other segments where there isn't. Right. So when today everybody is doing EV, but if you were there 10 years ago when Musk was, they weren't. Right. So it's a question of your own conviction on whether you want to build a sustainable product company or you want to build a company, right? So I think I would not let the market drive your thinking. The challenge that I see, guys, by the way, is the biggest sort of question in the mind of the entrepreneur is when they're fundraising, because at that point, you are sort of at the mercy of the market, and the market is telling you multiple things. And what you have to sort of step back and say, if I have to, if the only way I can grow my business is by raising more capital, and the market is telling me X, and I'm hoping that the market is telling you consistent X, then you have to sort of step back and say, okay, am I missing something in my own sort of thesis development? And should I be looking more at what the market is telling me or what the investors are telling me, because the investors are also in the market and they are sort of interacting with multiple people. So I may come back to you and say, there is a business in water treatment, but it is not a investable business because nobody's paying for it. And so that's my thesis. Now, you may have started a company in that space, you may have had a few clients on working with you and so on, and you may not believe me, and it's okay if you think that you can continue building the business without my capital. And I think so one is this point about sort of taking the noise away from what you are seeing in the market versus what the investors are telling you. Beyond, and that's sort of listening to the customer versus listening to the investor. Now there's a broader issue that in the climate tech space at this point, there is what we may think about as moonshots, but these are sort of more customer adoption problems. So I'm seeing, for example, a lot of companies that are trying to solve consumer behavior shift by providing them better choice at the time of purchase, saying that, okay, there is this product that you're buying, there are 3 other products out there that you could buy that are better for the environment. Is that something that consumers want? I haven't seen that right now. It may come. We have put some money, as a seed bet in a company in that space, but it's something again that you as a founder have to have more clarity based on what you're seeing in the market.
Thanks, Sandeep. Another question. And what do you think about, Rajan? Maybe you can get this. What do you think about momentum-based or trend-based investing? Taking Q-commerce, faster delivery as an example.
Yeah, I think one of the things that we've learned about some of these segments is they are quick. They come and they go. So look, I think the reality is, even some of the smartest investors in the world sometimes, think that the impossible can happen. I.e., if you deliver something in 2 minutes, you can actually make money doing it. But I think what we've seen is that it's very, very difficult for a business to make money if you're delivering something in 2 or 4 or 5 or 6 or 7 minutes. So look, I think there are going to be a few of these sort of themes, but really, like quick commerce at the end of the day is commerce, right? So instead of 10 minutes, it becomes 30 minutes and 40 minutes. And there is some window of time. I mean, at the end of the day, what you're trying to optimize, right, is what will consumers pay a premium for? And how much of a premium will they pay? Now, what we do know is if you deliver any product in 30 minutes and you don't charge them a premium and you lose money on every product because we are trying to discount, that business ain't going to go anywhere. Okay, that point taken. Okay, so now you say, okay, what if we don't lose money on every product? We have 0 gross margin, but we don't charge a delivery fee, and then we deliver in 10 minutes. Still lose a lot of money. Okay. And then you keep going, right? So then you keep going and saying, okay, what can we charge in terms of an incremental delivery fee? And then what will consumers be willing to pay for, right? Would they be willing to pay for 20 or 30 minutes? Or you say, look, I'm not going to charge, but I can make the math work, meaning long-term, my unit economics work by delivering 30, 40 minutes. So I think, look, basically with some of these spaces, a lot happened. I mean, basically second half of 2020 and 2021 was a period of right? Exuberance in, it's a weird thing to say because we were in the middle of COVID, the whole world was shut down, and we had $7 trillion that went into the US economy. And, a lot of that flew into real estate and public equities and private, to startups, only one part of it, right? So I would say, but at the, my counsel to founders is don't chase trends. By the way, counsel to investors also, right? Is really focus on solving a problem you deeply, deeply are passionate about, right? Like if I look at our semi team, I mean, they are obsessed with making farmers in Indonesia successful. Okay. I mean, they wake up every morning, they drive 7 hours to get to the, Toko Tanis. I mean, they are just obsessed. They live agriculture every waking minute, right? So it makes sense for them to build that business, and they're not doing it because Agritech is interesting or because, agriculture is a, $200 billion industry or whatever it is, right? They're building it because they are passionate about solving these set of problems that Indonesian farmers face. And I think that's the right approach that founders should take. And similarly, investors, like first principles based investing, right? Is there a problem to be solved here? Is this the right founder to be solving this problem? I mean, those are the sets of questions that we always ask. And, there are momentary periods where some of these mega trends, come and they go, right? So
we have a ecosystem question. Indonesia is growing very fast and clearly $4,000 per capita income, huge opportunity. How do we solve for tech talent in Indonesia? Any learnings from India or any other country?
Yeah, I think maybe firstly, Randy just talked about this program, right, that Google has launched with Tokopedia and, what he mentioned, one or two other companies where you train 3,000, computer science or software developers. I do think as a nation, you should have more software developer talent. I mean, there's a bunch of computer science academies that are quite scaled up, in India and other places. So I think some of those companies should probably expand to Indonesia and help with that. I do think just ramping up computer science programs long term is super important. Indonesia has some very, very good universities. I think ramping up those CS programs. And third, look, there is now an ecosystem, right? Like I'm amazed. I mean, it used to be that search companies, Indonesian search companies, found it very difficult to hire engineers in Jakarta. But today, between Jakarta and the other two or three hubs that you have in the country, they're able to build teams. Now, that being said, at some scale, you may have to either expand and build your center in India, which is what Gojek did, which is what Tokopedia did, or even look at places like China. Some of the companies are actually building engineering centers in China. So, but it is getting better. I would say 5 years ago it was really hard even to hire your first 10 engineers in Indonesia. I think that problem, at least it seems, just using the lens that we have through our own companies, our search companies in as well as our Sequoia companies in Indonesia, that seems to be changing. But that being said, look, there's always going to be a shortage. In my lifetime, in Sandeep's lifetime, Apurva, maybe in your lifetime, there is always going to be a shortage for high quality software developers. So Apurva, if all else fails, join Meta School and learn Web3.
Yeah.
Clearly, Rajan, that's very sound advice for my backup career.
I know exactly. Never know. If this whole MCing thing doesn't work out, you know what to go do now.
Yeah, completely. Interesting.
Apurva, I think we have entrepreneurs on this call. I think there's a great opportunity that just got identified. Go set up, tech schools in Indonesia.
Absolutely. I think something like Scalar will do very well.
Yeah, exactly.
Absolutely.
Yeah, I mean, Scalar is just rocking.
Absolutely. We have a question from Uma Venugopal. As a founder building a social platform around readers, books community, what metric should I focus on while raising a seed round?
Yeah, I think it's maybe I'll take. Actually, Sandeep, you want to take that? It sounds like a.
Yeah, sure. So actually, we are investors in a company called Pratilipi that actually works in this space. So happy to sort of talk about this. Clearly, there are two metrics, right? Actually, there are three metrics. So there is what we have seen is there are readers, there are authors, and then there's engagement levels. Those are three things that you keep track of. So what we are seeing is basically you need to seed the market with authors, but eventually the readers turn into authors, and the more they are engaged on the platform, the more likely they're going to turn into authors, and that sort of creates a feedback loop that makes the overall platform, just strengthens the platform overall. So I don't know if that answers your question. Is that what you're looking for? But effectively, that's how Pratilipi has grown.
Absolutely. I think with the limited information we have on Uma's venture, it's a great answer. Any parting thoughts for founders? We're down to last 2 minutes. So would love to get a closing statement from both you, Rajan, and Sandeep. Maybe Rajan, you first.
Yeah, I mean, look, it's a great time to be building a startup. Whether you're in Indonesia, whether you're anywhere in Southeast Asia, whether you're in India, whether I think one of you, I heard in the opening, is dialing in from Saudi Arabia, right? We've made several as Sequoia Capital. We've made several investments now in the GCC. So it's a great time to be building a company. I think my parting thought is, build a product that users just love. Like the love should be unquestionable. Right. And by the way, when users love your product, they will keep buying it and keep using it. And if it's a product they pay for, they'll keep buying it. And eventually they will either pay for it or you will find a way to monetize it through either if it's a consumer product, through advertising, or through fintech or some other way. But ask this question, right? Do your users really love your product? And do you have unquestionable, extraordinary product market fit? Because the fastest way to build a mediocre company is to have mediocre product market fit. So whatever you do not build mediocre products.
Love it. Sandeep?
Yeah, I think I just want to reiterate the fact that we are now back in a normal environment. And so, as in the past, capital efficiency will have a larger role to play. And all of you who are on this call should be thinking about that as you're building out your businesses, and sort of have your own approach drive things rather than investor sort of driving you and your agenda, which was, I would say, the case over the last 3-4 years. We saw a little bit of that sort of issue. The second, as again Rajan said, product is the critical thing, and this is now just not a B2C requirement, but this has now become a B2B requirement. So as the sort of overall ecosystem shifts towards this consumerization of technology and consumerization of business models, even the enterprise companies, the companies that are focused on selling to large enterprises or B2B plays, have to start very early on making sure that the product market fit is there. So again, I could not overemphasize how important product plays in the sort of growth of a company. So with that, those two things I would say I would leave with the founders here.
Thank you. Amazing. We had more than 200 people tuned in, rapt attention. Thank you so much, Rajan and Sandeep, for a amazingly engaging session, unvarnished views, and creating so much excitement around the ecosystem. We loved the discussion, and very, very warm thanks from all the attendees, the Indonesian government, G20 organizers, and Google. To all the participants who have logged in, we're wrapping up the sessions for today. Thank you so much for joining in, and we look forward to seeing you all tomorrow.
Bye.
Thank you, Apurva. Thanks, Sandeep. Great
Thank
to
you.
see you.
Thank you, everyone. Bye-bye.
Bye-bye.